Hi, welcome to the Crypto Republic. If you're serious about staying ahead in this once-in-a-lifetime financial ship, make sure you like this video and subscribe. Hello, XRP Army, and welcome back. Here at the Crypto Republic, we give you the bird's eye view, a satellite perspective to spot the big picture shifts while everyone else is stuck in the daily chaos. Just a reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. Look around carefully. Most people think the digital economy is decentralized already. It's not. Almost everything you touch online, your banking apps, your cloud, storage, streaming platforms, AI tools, even critical government systems, runs through a tiny cluster of centralized infrastructure providers. Amazon Web Services, Google Cloud, Microsoft Azure. 3 companies, 3 choke points. And that is becoming one of the biggest geopolitical and financial risks of the 21st century. Now, here's where this gets serious. If those systems are disrupted through cyber warfare, sanctions, political conflict, regional instability, infrastructure failure, or even coordinated regulation, the global digital economy freezes. Let that sink in, ladies and gentlemen. This is so important. This is not conspiracy theory territory. Central banks understand this. Defense agencies understand this. Sovereign wealth funds understand this. And increasingly, nation-states are beginning to act on it, which brings us directly to ICP, the Internet Computer Protocol, a project most of the market wrote off as dead after one of the most brutal collapses in crypto history. But beneath the surface, something extraordinary may be happening. Because while the market was distracted chasing meme coins and AI hype cycles, ICP spent years rebuilding infrastructure. And now, for the first time, we may be witnessing the emergence of a truly decentralized sovereign cloud. Not a theory, not a white paper, actual infrastructure, actual adoption, actual compute, actual governments. And if this thesis is correct, then ICP is not competing with other cryptocurrencies. It is competing with the cloud infrastructure layer of the entire internet itself. Let that sink in, ladies and gentlemen. Let's start with the macro picture. The modern economy runs on digital infrastructure, global finance, defense systems, healthcare, artificial intelligence, supply chains, energy grids, communication. Everything depends on compute. But here's the problem nobody talks about enough. The world does not own its infrastructure anymore. It rents it. That distinction truly matters because centralized cloud providers are effectively landlords of the digital economy. And in a world of escalating geopolitical fragmentation, sanctions, trade wars, and cyber conflict, infrastructure ownership becomes national security. This is why sovereign digital infrastructure is becoming one of the most important macro themes of this decade. And ICP enters this conversation in a very unique way. Because unlike traditional cloud systems, ICP is designed so applications run directly on-chain through decentralized node providers distributed globally. No centralized hosting, no AWS dependency, no single kill switch. That changes the risk profile entirely. And suddenly, the conversation moves beyond crypto speculation into digital sovereignty. And this is exactly why what happened with Pakistan matters so much. On May 10th, 2026, something happened that most financial media barely covered. Pakistan's digital authority partnered with the Definity Foundation to deploy sovereign AI infrastructure on ICP. Think about how significant that is. A nation-state choosing decentralized infrastructure over hyperscale dependency. Not because it's trendy, because it solves a strategic problem. This included 1,500 AI licenses, secure communication infrastructure, sovereign AI cloud development and deployment, entirely outside traditional Western-controlled cloud systems. Now pause for a second. This is the first real signal that governments may be viewing decentralized compute infrastructure as strategic national infrastructure. That's a completely different valuation framework than just another blockchain. This is very, very important, ladies and gentlemen. Let that sink in. Because if even a handful of emerging economies move toward sovereign decentralized infrastructure, the total addressable market becomes enormous. We are talking about portions of the global cloud industry, potentially portions of the AI infrastructure market, potentially portions of sovereign data systems. This is where the 100 trillion reset narrative begins making sense. because this isn't about replacing banks overnight. It's about replacing dependency. And ICP may be positioning itself as the infrastructure layer for that transition. Real quick, if the kind of analysis you just heard is valuable to you, I want to let you know something about what we've built, a community on Patreon. The Crypto Republic Desk Monthly. We have over 550 members. The link is in the pinned comment below. And we do exactly this kind of research every single day. We dig into on-chain data, macro trends, adoption metrics, and we share our findings with each other. We're a group of people who pride ourselves on studying the fundamentals and emerging trends in both the crypto and equity space and commodities. We share educational insight, we challenge each other's thinking, and we hold each other accountable. Just pure research, data, and honest conversation. It's all about navigating these markets and learning together. We even had members tell us that a single valuable insight gained from our discussions has more than covered their yearly membership fee. If that sounds like your kind of community, check the pinned comment. The link is right here. Come say hello. We'd love to have you. Now let's get back to the data. Now here's where the story gets deeply interesting. Most crypto networks still rely heavily on speculation. Price goes up because hype goes up. But ICP is attempting something radically different. An open loop economic system tied directly to compute usage. Here's the simplified version. Applications running on ICP consume computational resources called cycles. Those cycles are generated using ICP tokens. And as usage grows, more ICP gets consumed and burned. Meaning real software activity creates real token demand. Not speculative demand, utility demand. This is extremely important because if ICP successfully connects enterprise compute usage to token destruction, then you can create a direct bridge between software infrastructure, demand, and digital asset economics. That's fundamentally different from most crypto models. And recently, the burn metrics started accelerating aggressively. On May 2nd, 2026, ICP reportedly reached a cycle burn rate equivalent to approximately 1.6 million in compute burned in a single day. That's not theoretical usage. That is active infrastructure consumption. Now imagine what happens if sovereign AI systems, enterprise applications, and autonomous AI agents continues scaling on-chain. You could theoretically reach a point where network demand outweighs inflation entirely. That's the turning point investors are watching closely, because that is where ICP transitions from inflationary infrastructure into potentially deflationary infrastructure powered by real compute demands. And if that happens, the market may need to completely replace what ICP actually is. But we cannot talk about ICP honestly without addressing the elephant in the room, the collapse. In 2021, ICP launched above 700, then suffered one of the worst crashes in crypto history, ladies and gentlemen. Pull up a chart and look at this. This is very important. Write this down and look at this. Let this sink in. A decline exceeding 99%. That psychological damage hangs over the project today. For many investors, ICP became synonymous with failure. And that matters because markets are very emotional. Narratives often overpower fundamentals. But here's the paradox. While sentiment collapsed, development continued. Today, ICP reportedly has over 280,000 deployed canisters, more than 35,000 GitHub comments, and one of the most active developer ecosystems in crypto. A major Switzerland-based research operation, and growing daily wallet activity. Now, whether you're bullish or bearish, you cannot ignore that disconnect. The infrastructure matured while the narrative died. And historically, some of the biggest asymmetric opportunities emerge exactly in those environments. Why we always say pay attention to what's quiet, ladies and gentlemen. When perception and reality diverge dramatically. Before we move on, I want to do a quick check-in. If you're finding value in this video so far, please take a moment to hit the like button. It significantly helps the channel reach more people. I would also love to hear your perspective on whether sovereign digital infrastructure is inevitable or still too early. Please share your thoughts in the comments below. If you'd like to see more content like this, be sure to subscribe. Feel free to share this video with a colleague or friend who might benefit from it. All right, let's dive right back into this. Let's discuss what may become the defining moment for ICP economics. Mission 70. This is an aggressive attempt to reduce network inflation by approximately 70% before the end of 2026, from around 10% inflation to under 3%. This is not a cosmetic adjustment. This is structural monetary surgery. And ICP is attempting this while the network remains fully operational. Now, this introduces a major challenge. For years, ICP incentivized extremely long staking periods, up to 8 years. These holders became known as the 8-year gang. But now, the protocol is restructuring incentives and reducing lock dynamics, meaning eventually liquidity begins returning to the market. That creates potential sell pressure. An ICP solution is fascinating: an adaptive disbursement queue, essentially a system designed to stagger unlocked algorithmically to avoid liquidity shocks. Think of it like pressure management inside a financial system. If it works, ICP may achieve one of the cleanest transitions from inflationary to utility-driven tokenomics in crypto. But if it fails, you could see severe volatility. This is why the next 12 to 18 months matter so much, because this period determines whether ICP's economic model can survive contact with reality. Now let's talk about what could become the biggest catalyst of all: artificial intelligence. Because ICP is not simply trying to host applications. It's trying to host autonomous AI infrastructure directly on-chain. And that changes the conversation dramatically. One example is Caffeine.ai, a system where users can conversely instruct AI to build decentralized applications autonomously. Imagine saying, build me a decentralized ride-sharing platform, and the AI writes the code, deploys the backend, hosts the infrastructure, launches the application without AWS, without centralized servers, without DevOps teams, without traditional cloud dependency. This is what some developers are calling vibe coding. And if this model scales, software development itself changes. Now here's the critical ICP advantage. The AI models runs on infrastructure can run fully on-chain, meaning transparent interface, transparent execution, tamper-resistant deployment, auditable systems. In a future where AI becomes deeply integrated into governance, finance, healthcare, and defense, verifiable AI infrastructure becomes extremely valuable because trust becomes the scarce asset. And centralized black box AI systems may eventually face enormous resistance from governments and institutions. ICP is effectively positioning itself as a sovereign AI infrastructure. This is massive. This is massive. And that is a truly massive narrative, ladies and gentlemen. Another major innovation is chain fusion. We're trying to take the PhD out of PhD, everybody. So if you got to rewind this and go back, this is what we feel is most important. And this is what I spend a lot of time telling family offices and people who retain us any capacity. Now, this sounds technical, but the implications are huge. Most blockchains rely on bridges to interact with other networks, and bridges have historically been catastrophic security risks. Billions of dollars have been lost through bridge exploits. ICP attempts to solve this by enabling narrative transactions, signing across chains like blockchain, Ethereum, and Solana. Without traditional bridges, that matters enormously because interoperability is essential for mass adoption. And if ICP becomes the orchestration layer connecting multiple blockchain ecosystems securely, it evolves beyond another layer one. It becomes infrastructure, middleware for the decentralized internet. Again, this is infrastructure thinking, not meme speculation. Here's the question, ladies and gentlemen. Sophisticated capital is beginning to ask, what happens if decentralized infrastructure becomes investable at institutional scale? Because regulated ICP staking, ETPs, already exist in parts of Europe. And meanwhile, in the United States, dozens upon dozens of crypto ETF applications remain under review. If broader crypto infrastructure products receive regulatory approval, you suddenly expand access dramatically. Pension funds, family offices, sovereign actors, institutional asset managers. And remember, institutions are not looking for memes. They're looking for infrastructure, cash flow analogs, utility layers, strategic positioning that aligns far more closely with ICP's evolving narrative than most speculative crypto assets. Now, let me be very clear. This is not guaranteed success. There are serious risks here. Pakistan could remain an isolated case. Sovereign adoption may move slower than expected. Mission 70 could fail to stabilize economics. The adaptive queue system remains largely untested under major stress. And perhaps most importantly, superior technology does not always win. History proves that repeatedly markets are brutal. Narratives matter. Timing matters. Execution matters. ICP could absolutely become one of the greatest technical achievements in the blockchain. and still completely fail commercially. That possibility must be acknowledged. But if adoption accelerates while token economics tighten, then the upside asymmetry becomes very difficult to ignore. The biggest mistake investors make is assuming systematic shifts happen suddenly. They don't. They happen gradually, then all at once. And what we may be witnessing right now is the early architecture of a new digital infrastructure paradigm, one where nations seek sovereignty over compute, one where AI systems require verifiable transparency, one where centralized cloud dependency becomes a geopolitical liability, one where ownership replaces rental models. And in that world, ICP becomes extremely relevant, not because of hype, because of infrastructure necessity. The market still sees ICP through the lens of 2021, but the world of 2026 is very different. AI changed everything. Geopolitics changed everything. Data sovereignty changed everything. And infrastructure resilience may become one of the most defining investment themes of the next decade. If ICP succeeds, it may not merely become another crypto asset. It may become part of the foundational plumbing of the decentralized internet economy itself. And that is why the next 12 to 18 months matter so much. Because this is the window where theory meets reality, where the sovereign adoption either accelerates or stalls, where burn mechanics either sustain or collapse, where decentralized AI either scales or fails. But one thing is becoming increasingly difficult to deny. The reset is not coming. It's already here. Ladies and gentlemen, if you made it to the end of this video, thank you for watching. Your being here shows that you are truly invested in revolutionary tech. If you haven't already, please hit the subscribe button and turn on notifications so we can continue to grow and learn together. If you gained something valuable today, leave a like and let me know your biggest takeaway in the comments section. Finally, please share this video with someone in your network who could use this information. Thank you again for your time, and I will see you in the next video. Have a blessed day.